welcome back to another video. So today it's around like the end of January, and we are sitting towards the end of this financial year, that is 24 and 25 financial year. So let me share with you guys some very useful hack or like a tax saving mechanism that you guys can use to save lakhs to crores rupees in this point in time, because it's still we have 2 months to end of March. So we are still in that financial year where you can do a bit of tax planning. So let's kickstart the video. Yes, with bit of that introduction, let's get into tax loss harvesting. I thought of making this video on tax loss harvesting because this is the right time. We have seen an all-time high in 2024 on the broader market, and right now, uh, 3 4 months we are into losses. Like Nifty 50 itself is kind of 15% down from kind of all-time high. So a lot of people who kind of invested their bulk or like started investing in 2024 or churned their portfolio during 2024 would be sitting upon losses in many of their securities right now, be it mutual fund, be it direct stock, or be it ETFs. So it could be that these people has made some profit and booked those profit during this financial current financial year, and those profits or gains would be subjected to long term or short term capital based on the classification, right? So let's assume a case where a person has a long term capital gain of around 5 lakhs in this financial year, where obviously based on the new guidelines for the financial year, he would get a rebate for 1 lakh 25,000. But at the same time, he would have to pay tax for the rest of the amount, the 5 lakhs minus 1 lakh 25,000, right? But what we do in tax loss harvesting is kind of booking these losses to offset these gains. So let's get into this presentation, and this will give you a whole idea of how this tax loss harvesting would be done. And it is very important to know at this point in time, because the broader markets are losses for like last 3 4 months, and it's going on the bearish trend, right? So, as we discussed, it's nothing but selling the underperforming investments to realize the losses, so that these losses will offset the capital gains and thus reducing the tax liabilities. So, why reduce capital gain tax, right? Obviously, like at the end of the financial year, whenever you file ITR, all these profits or gains would come into your income, and you would have to pay tax on that, right? So if you kind of offset these gains, uh, to some extent, your tax burden will be reduced, and this is a very uh, good way to kind of save tax, especially in this current scenario of where market is not doing great for last 3 4 months. So the methodology is simple. In this methodology, you need to go to your portfolio and you need to identify securities or assets that are at losses right now, and you need to kind of understand like how much of a capital gain you would have booked already in this financial year, and how much of your loss making or underperforming assets should be sold to kind of offset fully or partially uh, to get the benefit of tax loss harvesting. So this is what I already explained, like selling the underperforming assets. That's what you need to kind of do. And this will offset the gains that you already made, right? And you need to kind of create this offsetting in the best possible manner such that it gives you maximum efficiency. And also this gives you like a reinvestment opportunity as well, right? I mean, in tax loss harvesting, nobody is telling you to kind of sell everything and keep sit on cash. It's basically like just in order to reduce the tax burden for that financial year, you can actually sell the securities and you can buy those securities at the same or similar price. It can be the same securities you're buying it again if you have a long time conviction on those assets, or it can be a different or similar assets that you wanted to buy, and this gives you a reinvestment opportunity as well. And these are the some of the main benefits of tax loss harvesting, that is the tax reduction that which we already explained. And this gives you an improved portfolio management as well, because on a regular interval over the years you will be kind of looking at your portfolio and looking at the underperforming assets, and uh, these underperforming assets could add value to your portfolio overall tax burden. At the same time, you can sell off these securities at a benefit of lowering the tax and get into similar or other securities. And this also kind of keeps your whole portfolio in the long-term investment strategy that you have, right? And over the years, this can benefit you from reducing your tax and maybe like improving your overall uh, capital gain or overall profit that you get uh, by 2%, 3% in that kind of a range, right? So this makes your long-term investment strategy intact and gives you uh, a better return than somebody not doing the tax loss harvesting. Yeah, being said that, there are few caveats that you need to actually check, because when you are selling this security just for the purpose of tax loss harvesting, you need to consider the transaction cost as well, any brokerage fee or any if there is any kind of taxes on realized gain or any commissions that you are going to pay. And even if there are some caveats in the taxation system, like as far as now in India there is nothing of that sort. You can kind of sell the securities and kind of buy the same or similar securities without any issue. But like in US, there is a caveat again, like you cannot just sell a security and buy back those securities within a time frame of 30 days just to avoid the tax or reduce the tax liability. So you need to be watchful on these things as well. So it's always better to kind of consult a professional to evaluate your tax loss harvesting possibilities as well. So if your portfolio is of good amount, like let's say like its portfolio is more than a 50 lakhs or like a more than a 1 cr kind of a portfolio, you can actually make a lot of tax benefit by looking at the possibility for tax loss harvesting. And I think this is the right time to educate everybody around tax loss harvesting. And many of you people would be of benefit if you kind of evaluate your portfolio at right in this point in time, because market is favorable for tax loss harvesting as of now. Thanks.